Welcome back to Prop News Time. Here are the headlines for the day. India targets 50 new airports. Eyes USD 4 billion MRO market. By 2031, India plans to add 50 new airports over the next 5 years. Union Minister K. Ramohan Naidu announced at IATA's annual meeting. The country now operates 162 airports, up from 74 in 2014, driven by initiatives like the UDAN scheme, which has launched 619 regional routes connecting Tier 2 and Tier 3 cities. The government also aims to make India a global maintenance, repair, and overhaul MRO hub, targeting USD 4 billion in MRO market value by 2031. Naidu called for global collaboration on sustainable aviation fuel, SAF, to decarbonize the sector. With India among the world's fastest growing aviation markets, these expansion plans will strengthen domestic and international connectivity, boost industry partnerships, and promote greener air travel. The move signals a strong, future-forward vision for India's aviation sector. A residential flat spanning 548 square feet sold in Springfield. In Palghar's Navghar, for INR 75.2 lakhs. A residential flat spanning 762 square feet sold in Shahji. The Empire in Palghar's Jauhar, for INR 22.5 lakhs. A residential flat spanning 812 square feet, sold in Relax Homes in Palghar's Dabchari, for INR 21 lakhs. Bengaluru lease. Deals. Vyapar secures 90,000 square feet at Enzyme Office Spaces Sarjapur facility. Enzyme Office Spaces has leased 90,000 square feet to accounting software firm Vyapar at its new Sarjapur Road Centre in Bengaluru. The 120,000 square feet facility, with 3,000 seat capacity, is now nearly fully occupied, with only 30,000 square feet remaining. The space was customized to Vyapar's operational needs, reflecting rising demand for flexible, tailored office environments among digital-first companies. Founder and CEO Ashish Agarwal noted strong interest from tech-driven businesses. Earlier this year, Sugar Cosmetics leased 14,000 square feet at Enzyme's Andheri East Centre in Mumbai. Enzyme currently operates 32 centres across Bengaluru, Mumbai, Hyderabad, and Delhi NCR, totaling 1.55 million square feet and 38,000 seats. Workspace pricing ranges from INR 5,000 to INR 25,000 per desk. As hybrid work models evolve, Enzyme's flexibility and customization remain key draws for modern enterprises. Signature Global to invest INR 4,000 crore in land and construction in financial year 2025 to 2026. Signature Global is set to invest approximately INR 4,000 crore during the current financial year to acquire land and fuel construction activities across its residential projects in Gurugram. The company had allocated INR 1,070 crore in the past year towards acquiring 48 acres in Gurugram. Of the upcoming capital deployment, INR 1,200 to 1,500 crore will be used for land acquisition, while INR 2,500 crore has been earmarked for construction. The firm reported robust sales bookings of INR 10,290 crore during the last fiscal and is targeting INR 12,500 crore in the current one. Signature Global's strong financials reflect a significant rise in profitability and income, marking its ascent among India's top 5 listed real estate firms. Lucknow Development Authority launches Udyog Nagar and Naimish Nagar housing projects in Lucknow. The Lucknow Development Authority, LDA, has launched 2 major housing projects, Udyog Nagar and Naimish Nagar, targeting the city's growing demand for affordable, well-planned residences. Udyog Nagar is envisioned as a modern township with green spaces, strong connectivity to commercial hubs, and integrated urban amenities. Naimish Nagar will offer varied housing options catering to diverse income groups, with an emphasis on affordability and quality. Both projects will be developed in phases, employing sustainable construction technologies aligned with national urban housing policies. Building on its successful track record of housing schemes for low to middle income groups, the LDA aims to further bridge the housing gap. The new townships will also feature recreational areas, schools, and healthcare facilities, contributing to community welfare. As Lucknow's infrastructure rapidly evolves, these projects are expected to drive residential growth and ease market demand. Mumbai lease deals. Tata Digital takes 59,000 square feet at One International Centre in Lower Parel. Tata Digital Private Limited has leased approximately 59,000 square feet of office space across 3 floors at One International Centre in Mumbai's Lower Parel business district. The 5-year lease covers the 15th, 16th, and 17th floors, with a monthly rent of INR 1 crore 5 lakh plus INR 12 lakh 32,000 in common area maintenance charges, totaling about INR 1 crore 18 lakh monthly. The lease includes a 5% annual rent escalation and a rent-free period from February 1st to July 15th, 2025. Tata Digital has paid INR 7 crore 7 lakh as security deposit and secured 49 car parking slots, with additional parking available at INR 10,000 per slot. This move reflects sustained demand for premium office spaces in Lower Parel, a preferred hub for corporate occupiers due to its strategic location, connectivity, and modern amenities. Uttar Pradesh intensifies crackdown on unauthorized constructions with 3-month drive. The Uttar Pradesh government has launched a comprehensive 3-month initiative to address unauthorized constructions across the state. This decision follows a review revealing that out of 250,000 complaints received during the 2024 to 2025 financial year, only 3,507 were resolved, leaving the majority pending. The campaign focuses on cities like Prayagraj, Varanasi, and Gorakhpur, targeting multi-story residential and commercial complexes built without permission and permanent structures on government land. Authorities have been directed to conduct weekly inspections, enforce immediate sealing of illegal establishments, and utilize a centralized portal for real-time updates. The drive aims to expedite the resolution of pending cases and ensure compliance with building regulations. Pune, PCMC issues emergency notices to 82 dangerous buildings ahead of monsoon. In its latest pre-monsoon survey, Pimpri Chinchwad Municipal Corporation, PCMC, identified 82 structurally unsafe buildings, issuing emergency notices to mitigate potential monsoon hazards. This marks an improvement from 132 unsafe buildings flagged in 2024 and 125 in 2023, reflecting better compliance and proactive repairs by property owners. Of the 82 buildings, 4 require immediate demolition, 11 need urgent evacuation and repairs, 16 need major repairs, and 51 need minor fixes. 9 previously unsafe buildings have already been repaired or demolished. PCMC is also acting on its own assets, recently demolishing a deteriorated civic school building. These annual surveys aim to prevent building collapses during heavy rains. PCMC urges all property owners to comply with safety notices promptly. Through vigilant monitoring and community cooperation, the civic body seeks to enhance public safety ahead of the monsoon season. Delhi mandates anti-smog guns for all buildings over 45 meters. The Delhi government has taken a bold step to address rising air pollution levels by requiring anti-smog guns to be installed in high-rise structures taller than 45 meters. The directive, issued under the Unified Building Bylaws for Delhi 2016, applies to both new and existing projects. Developers have been instructed to incorporate these pollution control measures during the construction phase itself. The requirement also extends to previously completed high rises, reflecting the government's broadened approach to environmental compliance. The move comes amidst persistent air quality concerns and a push for stricter enforcement in the capital's real estate sector. Net zero buildings could help India cut 8 gigatons of carbon dioxide by 2050. NIUA RMI India's real estate sector could drive significant climate gains by adopting net zero building practices. According to the NIUA RMI report, Build Right for the first time. The report estimates that integrating net zero principles in new construction could cut up to 8 gigatons of carbon dioxide by 2050. Though this transition adds INR 4,566 per square meter, benefits include lower emissions, reduced operational costs, and healthier living spaces. Developers like Signature Global and Crisumi Corporation are embedding sustainability through energy-efficient designs, low-carbon materials, and advanced cooling systems. Market demand for eco-friendly homes is growing, with certifications like EDGE and IGBC gaining traction. The report calls for supportive policies, incentives, and updates to the National Building Code. States like Gujarat and Maharashtra are leading the way with net zero codes. As regulations evolve, India's real estate industry is poised to be a cornerstone of the nation's green transition. Navi Mumbai intensifies action on illegal constructions in Airoli. The Navi Mumbai Municipal Corporation, NMMC, has intensified action against unauthorized construction in Airoli. Acting on the Municipal Commissioner's directives, the Encroachment Department demolished an illegally built RCC structure behind Vinita Apartments in Sector 20. Despite prior notices under Section 54 of the Maharashtra Regional and Town Planning Act, 1966, the builder continued work without approval. The operation involved demolition equipment, a specialized crew, and an on-site encroachment team. A penalty of INR 50,000 was also imposed on the violator. NMMC has announced that such enforcement will continue citywide to deter violations and uphold planned urban development. The move underscores NMMC's commitment to preserving Navi Mumbai's orderly infrastructure and protecting law-abiding residents. Ongoing vigilance will be key to sustaining the city's growth and urban integrity. Punjab approves land pooling policy with flexible options for landowners. The Punjab Cabinet has approved a new land pooling policy aimed at facilitating urban development without forcibly acquiring land. Announced by Cabinet Minister Aman Arora, the policy gives landowners 3 choices: transfer land to the government, partner with private developers, or undertake development themselves. The first phase will launch in 27 major cities across Punjab. Under the scheme, landowners surrendering 1 acre will receive a developed 1,000 square yard residential plot and a 200 square yard commercial plot. Those contributing 9 acres can reclaim 3 acres for group housing projects. The policy, chaired by Chief Minister Bhagwant Mann, is positioned as a transparent, fair approach to land use planning. The government aims to counter opposition criticism by ensuring clear communication and effective implementation. Reliance Infra clears INR 92 crore 68 lakh dues to settle solar tariff dispute. Reliance Infrastructure has fully settled its dues, amounting to INR 92 crore 68 lakh with Dhursar Solar Power Plant Ltd towards tariff claims, effectively nullifying the initiation of insolvency proceedings filed against it. The payment was made in line with the Energy Purchase Agreement terms. The National Company Law Tribunal, NCLT, had earlier admitted an insolvency petition filed by IDBI Trusteeship Services Ltd, acting on behalf of Dhursar Solar, due to outstanding dues. Reliance Infra has now announced plans to approach the National Company Law Appellate Tribunal, NCLAT, to withdraw the insolvency order, asserting its redundancy following the settlement. Bharat 2030 Report. Smaller Indian cities to power. INR 10 lakh crore real estate to boom. India's real estate growth is shifting beyond metros, according to Bharat. 2030, the silent surge of Tier 2 and Tier 3 cities, a report by CII's Ashwinder R. Singh. Cities like Raipur, Belagavi, Salem, Udaipur, Aurangabad, and Ayodhya are emerging as key growth hubs, driven by rising aspirations, better connectivity, and reverse migration. These regions are becoming vibrant economic centers. Infrastructure, expressways, airports, and metro networks is now preceding real estate growth. Sectors like EV manufacturing, warehousing, and health tech are spurring demand for housing. The report urges developers to invest early in affordable housing, plotted developments, and townships. It highlights opportunities for investors beyond traditional markets, supported by local government incentives. This shift promises a more balanced, inclusive urbanization, with smaller cities poised to shape India's INR 10 lakh crore real estate economy by 2030. Chandigarh MC collects record INR 60 crore in property tax during rebate period. The Chandigarh Municipal Corporation MC witnessed an unprecedented rise in property tax collection during the recent 2-month rebate period, amassing INR 60 crore, marking the highest ever amount collected under the rebate scheme. This notable growth from the INR 39 crore collected during the same period last year was attributed to the civic body's decision to double property tax rates from April 2025 onwards. Over 65,000 property owners responded proactively, taking advantage of the rebate window. The majority were residential taxpayers, although commercial properties contributed a greater share due to higher tax slabs. The successful outcome was driven by streamlined payment facilities and effective communication by the MC staff. Bengaluru civic body collects record INR 2,425 crore property tax. In April-May, Bengaluru's civic body has recorded a milestone INR 2,424 crore 93 lakh in PIP property tax collections in the first 2 months of the fiscal year, driven by the newly introduced waste management user fee, expected to add INR 700 crore and a 5% early payment rebate. By April end, collections had reached INR 1,200 crore, with May surpassing that figure. Mahadevapura led zone-wise collections at INR 598 crore 51 lakh, followed by East Zone INR 455 crore 6 lakh, and South Zone INR 391 crore 96 lakh. The city aims to achieve a total INR 5,100 crore this year, including INR 836 crore 34 lakh in arrears from 3 lakh 75,000 defaulters and INR 152 crore 80 lakh in revised tax on 9,904 properties. This strong start highlights Bengaluru's improved revenue mobilization, supporting the city's evolving infrastructure and service delivery needs. PMC submits INR 1,500 crore relocation proposal for Pune flood zones. Pune Municipal Corporation, PMC, has advanced a INR 1,500 crore flood mitigation and relocation plan for flood-prone areas, Ektanagari, Vithalnagar, and Nimbajnagar, along Sinhagad Road. Under the Urban Redevelopment Scheme's cluster development provisions, 1,383 residential units and 67 commercial establishments in designated blue zones will be relocated to Hingne Khurd, outside the floodplain. The proposal is currently under state government review. Meanwhile, PMC has initiated immediate flood control measures, including debris clearance and CCTV monitoring to curb illegal dumping. Approval and funding are critical to executing long-term relocation and redevelopment. Compensation for commercial property owners remains delayed due to legal gaps in current regulations. With monsoon-related flooding intensifying, PMC's comprehensive relocation strategy aims to provide a sustainable solution for vulnerable communities while improving overall urban resilience. Upsida allots plots worth INR 700 crore to industries across UP. The Uttar Pradesh State Industrial Development Authority, UPSIDA, has allotted 113 plots, 88 industrial, 2 commercial, and 23 via Nivesh Mitra across key zones, aiming to attract INR 700 crore in investment and generate 4,800 jobs. Prime locations include Greater Noida, Kosi Kotwan, Varanasi, Unnao, Hapur, and Saharanpur. Notable allocations: Param Industries secured a warehousing plot for INR 36 crore. Sri Vinayak Group won a commercial plot for INR 31 crore. Evertouch Bioremedies will establish a pharma unit. Upsida CEO Mayur Maheshwari highlighted that digital, transparent allotments have boosted investor confidence. The move aligns with Uttar Pradesh's vision to become a $1 trillion economy, fostering industrial growth, regional parity, and sectoral diversification. More plots will soon be released as UPSIDA advances its industrial infrastructure agenda, positioning the state as a top investment hub. Schloss Bangalore to build luxury hotel and commercial complex in BKC. A consortium led by Schloss Bangalore, the Leela, has secured an 80-year lease for a prime commercial plot in Mumbai's Bandra Kurla complex, BKC, from the Mumbai Metropolitan Region Development Authority, MRDA. The consortium, which includes Arliga Ecospace Business Park, Portluta, and Schloss Chanakya Pavatluta, plans to develop a mixed-use project featuring a 250-key luxury hotel. The plot, spanning 8,411.88 square meters, with a permissible built-up area of 33,647.52 square meters, comes with a total lease premium of INR 1,302 crore 15 lakh. The highest bid was submitted earlier this year following MMRDA's evaluation process. IHG to open Holiday Inn Express and Suites in Pithampur by 2028. IHG Hotels and Resorts has signed a management agreement with Kevit Retreats for the development of a 150-key Holiday Inn Express and Suites in Pithampur, Madhya Pradesh. Announced earlier this week, the property is expected to open in the first quarter of 2028. This move reflects IHG's ongoing strategy to penetrate emerging industrial locations with globally recognized hospitality offerings. Positioned as a rising industrial center, Pithampur is especially known for its automotive and pharmaceutical sectors, making it a strategic location for hospitality expansion. IHG currently operates 50 hotels in India and is planning to add 63 more in the next 3 to 5 years. Shree Cement partners with RITES to boost Pan-India rail logistics network. Shree Cement Limited has entered into a 5-year Memorandum of Understanding with RITES Limited, a public sector undertaking under the Ministry of Railways, to enhance its railway logistics infrastructure across India. The collaboration aims to facilitate the sustainable and efficient transportation of raw materials and finished products across Shree Cement's manufacturing facilities. As part of the agreement, RITES will provide end-to-end services, ranging from conceptualization to commissioning, for the development, renovation, and upgrading of rail connectivity. The MOU, which can be extended with mutual consent, also includes regulatory approvals and assistance with contractor selection. Dubai real estate hits record AED 66.8 billion in monthly sales, up 50% year-wide. Dubai's real estate market saw a record-breaking monthly sales value of AED 66.8 billion earlier this week, which represents a nearly 50% increase over the same time last year. Transaction volumes remained robust, reflecting sustained demand and a maturing market. While the residential segment shows no signs of oversupply despite a large pipeline of upcoming units, certain neighborhoods like Jumeirah Village Circle might experience short-term price adjustments. Conversely, the commercial office sector is grappling with a significant undersupply, pushing prices upward. The city's appeal as a global hub for high net worth investors continues to underpin its property market strength. Portugal emerges as top escape for Americans chasing adventure, lifestyle, and value. Portugal has been identified as the top international destination for Americans seeking a fresh start abroad, as revealed by a recent Expatsy survey of over 116,000 respondents. The desire for adventure, personal enrichment, and growth ranked highest among motivators, with 2/3 of participants expressing intent to relocate within the next couple of years. Portugal's Algarve region stood out for its sunshine, outdoor lifestyle, affordable living, English-friendly services, and accessible visa options. Kronos Homes spotlighted several prime real estate offerings in the Algarve, appealing to both digital nomads and retirees eager to make the move. That's a wrap for today. Tune in tomorrow for the latest headlines.